Let's dive right into it, Emily. Let's start with Canada. I know sometimes we start with the U.S., but I think there's some Canadian earnings that have come through and some headlines. So let's start there. So Tilray announced their earnings. Their stock was up 25% yesterday. I think the headlines from Tilray was net revenue increased 27% to $513 million compared to the prior year. And their net revenue increased 25% to $142 million during Q4 compared to the prior year. So, when I look at this, looking at their 10K, their fiscal Q4 ended May 21st. So I actually ran some numbers in Headset to see, how it looks versus what we're tracking in the Canadian markets, which is British Columbia, Alberta, Saskatchewan, and Ontario private. And when we look at their fiscal Q4 versus the fiscal that same time period in 2020, Canada's up quite a bit, over 90% in dollar sales. Now, we all have to remember that Q4 2020, this fiscal year, March, April, May, was really in the thick of COVID. And so that really had an impact on cannabis sales in general. There were some spikes, some stockpiling behavior kind of dropped off, a lot of uncertainty. And, now things are kind of mellowing out. But when we look at just calendar year projections, and we'll get into some of our market projections here for Headset with 2020 versus 2021, Canada's growing at about 55%. And that's what's tracking so far. And we're in July here, but we expect that to maintain throughout the rest of the year. So when you think about 55% versus 25%, it seems like they're a little behind the market growth on their numbers here. So they're growing their revenue base, but it's just not at the pace that we see coming out of Canada. Any thoughts on that?
If I was, like GTI, who hits their earnings quarter over quarter, every quarter, I'd be pretty frustrated because it's really interesting to see the two biggest names in Canada, they miss on their earnings and their stocks go up. But we know there's other things at play here, and
Sure.
There's a lot of things going on in the stock market. But I don't know. I don't know how you don't keep up. I mean, that was our whole thing when we launched our firm, is like, we want our performance to match or outpace the growth of the industry. And if I was an operator that had as much market share as they do, or exposure and resources, I'd be really thinking about why we can't do that. Now, they did cite issues like you mentioned with COVID, and they also cited, because they have leaned in heavily in the European market, and the European market it's pretty small in early days, and so launching into that is not going to be a massive driver of returns yet, but they are placing a bet on the future facing growth of that market, which, coming off of low numbers, should be pretty interesting from a growth standpoint, but not necessarily from a numbers standpoint. Does that make sense? And so, I think it's interesting. They had to write down, I think, some additional inventory, but we'll see. I mean, they're one of the only LPs that I think has actual EBITDA, which is interesting. And, before even yesterday's 25% stock increase, I was reading the Citi puts out every other week, they put out a report. And last week they put out a report showing that the stock was trading at 61.6 times 22 EBITDA, which is like, when you're looking at the, US operators, you're seeing, I mean, it's in Canada's going at a huge multiple, but, if you get into like GTI, it's trading at like 14 times 2022 EBITDA. Trulieve is at like 9 times, the median there is 9.8 times. So it's just a really different market dynamic.
Yeah, it's a great point. The last bit of Canada news, so Sundial made an investment into Clever Leaves through a convertible note here. I think this ties back to what we were saying about Sundial and this investment arm and some of the diversification that it enables. Kind of like, if you had this fund, I think we talked about it a few weeks ago, if you had this fund, what would you do with it, right? And I think you did mention something along these lines, because Clever Leaves has some exposure in Latin America and in Europe, and this is a way for them to invest in that. Do you think, is this in line with what you were kind of predicting?
Well, it feels like it. We'll find out. Clever Leaves is one of the bigger global operators in terms of infrastructure. They've got facilities in Colombia, they have access points into Mexico, and they have facilities in Portugal as well as access points into Germany and the UK. They also have really focused on the EU GMP certification so that they can enter into that medical global supply chain. So I think that this is an interesting move on the part of Sundial, kind of pivoting their allocation of resources out of the Canadian market, which we've all seen has been challenging, and into a low cost manufacturing and production kind of supply chain out of Latin America, which is a huge opportunity. And I believe just this past week, the president of Colombia has approved the exporting of flour out of Colombia, which was not the case prior to this. So I think that will be beneficial to Clever Leaves, and then in turn beneficial to Sundial because it's a convertible. So they've both got the security of it being a credit facility, but also having the upside of the equity components to that. So it's an interesting play. And I think it's, we've talked a lot about the impact of the public markets on these Canadian stocks and these quote unquote meme stocks. And we talked also about, if you have that opportunity to utilize your public currency in an interesting way, then, if you don't do it, then you missed an opportunity. And, the CEO and I were chatting, and he's like, the window opened and I jumped right through it. So I think it's really smart what they've done here. And I'm curious to see what they are going to do with the Canadian side of their business. But I think this investment arm of the business is an intelligent way to use that access to capital that they have via the public markets.
Mm-hmm. Yeah, no, I think it's pretty cool to see, and hopefully, we see more of this. I think they're well positioned to do this type of investment, and kind of given the size of Canada and the opportunity in front of them there directly. And now that they've got their CPG brand, they've got their retail footprint, with their investment into Spirit Leaf, what's next, right? And I think that this is totally it.
Listen to High Rise on all major streaming platforms and watch the visual on YouTube.